Here back for another update. Let's take a look at Ethereum over here. And going back to March 12th when Bitcoin had its local top, we had our first leg down in the correction. We then came up for a counter trend, and now we're finishing up our last leg in the correction. Because remember, whenever you have a correction, whether it's a WXY or an ABC correction, you're going to have your initial advance. Okay, this would be your initial advance down. Then you have your counter trend, and then after your counter trend is finished, you then go on to finish your last leg or your final third leg down in the correction. As you guys can see over here, we're coming near the end of this last leg, in the correction. Okay, going back to March, we had a three-wave move down. We can call this our W wave, a three-wave move up for your X wave, and then we came down in another three-wave move. Okay, so this is a WXY correction. We've already come down to the 70.2% fib over here when we measure the move from our October 2023 low up to our March 2024 high. You see how we perfectly came down to this 702 over here, right? And then we saw a nice pop up, but we only had this pop up in a three-wave move. You guys see this? We never went up in an impulsive structure. So like I say in my last videos, if the market is not strong enough to produce a reversal off the 702, then it's likely going to come back down towards the 786 and then produce the reversal from there. The 786 lies at around $1891 to $1900 level. And when we dissect the waves of this last leg, we have our 5 waves here for our A wave. You have your 3-wave move up for your B wave. And then it looks like we're doing another 5 down, right? So you have your wave 1, wave 2, your third wave, your ABC up for your fourth, but now we're missing a 5th wave down here. Okay, now there is a possibility that this wave 5 here is truncated, right? It would be a truncation of the 5th wave, and usually when you have a truncation, the wave 5 comes down to the 702-786 region. That's sitting at 2274 to 2217. So there is a possibility that we would reject at any of these fibs above, come down to the 702-786, and then see a nice pop up from there. I feel like many, if we did come down here and bounce, I feel like many market participants would think that we would go ahead and make a new low, when in reality we would just see a truncation of the 5th wave and then bounce from there. Okay? However, if we end up losing 2217, then it's likely we'll have manipulation lower towards that 1891 level. Okay? And then this over here would be a little bit of an extended Y wave, or a little bit of an extended correction in the last leg. Okay, you would also be coming down to backtest this Wyckoff accumulation range that we have here. So as you guys can see, we were ranging on ETH for a very long time. Okay, and a lot of people were pulling their hair out, but the smart money knew that this was just Wyckoff accumulation, right? You have your selling climax, your automatic rally, your secondary test, your failed breakout, your secondary test in phase B, your move up to the top of the range for your failed break number 2, and then you come down mid-range, chop around here for your last point of support, and then you have your sign of strength, and this would be your jump across. It would be the jump across this creek that we have over here. Okay, this over here would be considered your creek, and then you have your jump across for your sign of strength. Okay, so this would be your SOS, and all we're doing over here is coming down for your backup phase. This would be called your BU. After your backup phase is completed, you then have continuation and expansion higher. Now you could say we already did have the backup phase, as we did come down to this 70.2% fib with this wick over here. You guys see that? With this wick over here? But let's be open-minded to the possibility of us having one more test down here of these lows at the 786 before we continue up higher. Okay, so going forward, what Ethereum bulls would want to see here is a move above 27.31 on the 4-hour time frame. Okay, above this red region over here. All you want to do is once you come to your chart, you just want to take a fib from this high here on August 24th down to this low on August 27th. Look at the 786 and the 702. If it gets a 4-hour closure above it, then we can say, oh, okay, this could possibly be a bottom here, and this could be a truncation of the fifth wave, right? But be mindful of these fibs here, because there is a possibility we see rejection and we see more downside towards this 702, 786, sitting at 2274 to 2217. Okay, if we do end up coming down here, there is a possibility of a short squeeze up, and this over here would be a truncation of the fifth wave, in which the wave 5 doesn't go beyond the bottom of your wave 3, and it just goes sideways instead. If you end up losing this level, then it's going to come down towards 1891. Okay, so Ethereum is bullish on the high time frame. As you guys can see, we have come down to backtest this Wyckoff accumulation range, the top of this range. And this happens in all markets, right? Once you have your breakout of the range, right? So this is your range, right? Right? And then you have your accumulation, a lot of chop, a lot of market participants pulling their hair out. Then you finally see your expansion above the range. But this is likely not the time to FOMO, because you're likely going to see a back test at the top of the range, maybe even a double back test, right? And then continue higher from there for your expansion. So it looks like the worst is over, or the worst is over soon, and looks like we're finally about to finish up this correction here on ETH, so we can get going in regards to the altcoin market. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out and take it easy. See you in the next one.